outside of their lane. So it's going to keep you in your lane. It's going to provide structure to guide the activities that you and your board have decided to pursue. It's going to allocate, it's where you'll allocate your resources at the beginning of the year. It will create the framework for measuring the work, what you've accomplished during the year, what you hope to accomplish, and it will help you adapt to changes from the external environment. And as we know, there's a lot of changes going on. It's the environment for nonprofits is a very difficult one to navigate. And it will help you reach agreement among your stakeholders. So can you put together a goal and show folks, your stakeholders, your contributors, your donors, that you can make them and put together something that's realistic? It is a plan, and as a lot of times, budgeting is your best guess. And just to stick with my attorney's analogy, changing lanes or doing a budget revision requires a lot of caution and review by your stakeholders. So we're going to go through some basic glossary terms. Accounts payable, amount that you owe to others for goods and services. So diaper banks will owe, they will owe for purchased diapers if you're lucky enough to have someone who will sell to you on credit. Your utility bills, your a basic nonprofit will have, they'll owe their auditor money, etc. Accounts receivable, those are amounts and funds that you expect to receive. They can be from grants, they can be from pledges, grants, contracts, etc. The accrual basis of accounting. This is where I hope most of you are, if you're not there yet, you're headed. You want to be on the accrual basis of accounting. It's the way you keep your records. It's you recording your transactions, such as your expenses when they're incurred, and income when it is earned. So it could be that you have a grant that will start on October 1st, but they won't get around to giving you the money for a couple of months. When do you record that? And those kinds of questions get answered depending on whether you're on the cash basis or accrual basis of accounting. Assets, of course, are what you own. Larger organizations will own real estate, definitely own computers and desks, things of that nature. Balance sheet, I'm going to go all the way back to my college days and my first Accounting 101. A balance sheet's a snapshot at a particular time. So if you decide to run a balance sheet as of today's date, it is your financial position as of that date. Cash flow, the movement of cash in and out of an organization. This is very important, and we'll talk more about it later on. Your current assets are those assets that you can turn into cash within 12 months or less. Current liabilities go along with your assets. Those are liabilities that you have to pay within 12 months. So those two examples, current assets and current liabilities, figure prominently later on in our discussion. Direct expenses, expenses attributable to a program area or cost center. They are identifiable to that cost center. You will have some expenses later on that perhaps to be adjusted. And you have to find, you may want to allocate them based on square footage, et cetera. And we can talk about that further. Grants, contributed assets with no reciprocal receipt of service or goods. Most of you should have grants. You occasionally will have, or not occasionally, but grants will generally have some sort of restriction on them to use for Program A, for Program B, to purchase a specific item. In-kind contributions, these are goods and services that an organization would get as a donation, but would pay cash for if they were not able to receive them in kind. Overhead are those items that are identified or cannot be identified with the program or activity. They are, we call them general and administrative. They are generally folks like me, your bookkeeper, your receptionist, your administrative assistant, your CFO, depending on how large you are. And we will talk about allocation of indirect costs later. A profit and loss, where a balance sheet is a snapshot on a given date, the profit and loss is more like a video, so it will give you the results over a period of time. And restricted funds, lots of folks will give you money and they'll have restrictions on them. You can buy a cradle with this $300 and nothing else. And so those receiving contributions, that is a distinction that you should pay attention to. The general steps for budgeting. Some folks who've been doing it for a while will have a they'll have their plan, or they'll have a I'm coming for lots of words. Well, we'll go back to it. The first thing to do is determine your timeline for a budget. So if you're coming, so for instance, and I'll use my agency as an example, we're a fiscal year June 30th. Our first draft of the budget was done a couple weeks ago. We're about a $4 million agency, and we have an affiliate, so we're going to probably go through about 3 revision processes, and we'll sit down with the stakeholders, which in my case would be the heads of the departments, and then the finance committee of the board, and then the board itself. So the first thing, determine your time. So you'll have a 12-month budget, you could have a 6-month budget, but generally they're going to be your annual fiscal year. You will need to agree on some goals, and since we're all diaper banks here, the primary goal will be how many diapers and to who are we going to try and distribute them over this determined period. You also need to know, as you're sitting down to get ready for and preparing to do your budget, is to understand where you are currently. What is your current financial status? Are you looking good? Do you have current assets in excess of your current liabilities? Do you need to budget something that will increase the health of your agency? And then a lot of you are going to be doing these budgets on your own. So agreeing on a budget approach is basically going to be a one-person operation until you get down to talking to your stakeholders. So you want to lay out how you're going to approach this and start gathering the information you need. And that could be your payroll information. It probably is going to be your profit and loss from the previous period. And it could be leases, depending on how big your budget. So you're going to need all of this information to develop your budget. Then basically, we're going to develop an expense and income budget based on your goals. And a lot of you are going to use different approaches. You're going to use prior year numbers. You're going to use zero-based budgeting, in which case you're going to look at each individual expense and start over again. Do we really, so last year we spent money on, I'll throw out water, delivered water. I used to work for a CEO who, as soon as the budget started getting tight, she'd cancel the water. So you're going to go right down to the it always wound up back in the budget, but you're going to look at each individual component of the expenses that you incurred in the previous year, and you're going to decide whether you need to live with them, increase them, or omit them altogether. And then you're going to review the budget, of course. You're going to review and make sure. When you're building a budget, you tend to get lost in the details and the numbers, and it is always good to just put it aside, talk with someone else about it, and review it from a little bit, review it from a 30,000-foot level. Kind of get out of the weeds and take a look at it from the top. Doesn't make sense. And then you're going to seek approval for your budget. And those of you who you may have a finance committee on the board, you need to go through. You may be a CFO or an accountant who has to get it approved by their CEO. And then ultimately you have to have it approved by your board. And you really should. I think that's your best practice, is to have it approved by your board and have that approval documented in the minutes of the board minutes. And then, of course, the last step would be to implement that approved budget. So I think there are two pieces to a budget. We're not talking about a capital budget here. We're talking about an operating budget. Those are the income you expect for the period that you've chosen, the 12 months in our example, the 12 months ended June 30th. And then the expenses that you expect to have to incur in that same period. Now, a nonprofit should also go through, in your budget, you should go through this, and generally when I build my budgets, I will start with the total budget, and then I will look at the distribution to various classes or departments. So you have to know how much of your budget is general and administrative, how much you're allocating to the fundraising function of your nonprofit, and then how much of these expenses are your program. As it says here, splits can vary. We use, in New Haven Home Recovery, I use various splits to allocate costs. It could be a timesheet. We keep track of our time based on our classes of general administrative, fundraising, and program. I can go back and look at the history and use that to split my costs up. I will use, for rent, I will use the square footage and allocate it between program and G&A. I will use FTEs, which are the number of employees I have allocated in my budget to each department. And those are examples of how to distribute some of those expenses. And I'll use all of them. You can use all of them. You don't have to use one over another. You can use a different one depending on the expense. It's what makes the most sense. So assumptions, these are the notes you're going to take while you're building your budget. Did you assume a 3% increase in your salary? Did you write that down so that the board or the finance committee understands that that is what's included in your budget? Did you start with the salaries from the previous year? Did I would suggest if you're small enough, or even if you're larger, you're going to identify all of your staff, either by pooling them for like-kind staff or just naming them out and listing them and putting them into the correct pool. The budgeting process should be flexible. You need to adapt. Because assumptions are just guesses, and they can change over time. So it's important to leave yourself notes, and that is when the board reads your budget, they should start with assumptions, and you should be helping them through the assumptions so that they know what it is that you based your budget on. Some other assumptions, of course, the biggest one, the number of diapers that you're going to distribute during the year. So these are all very important to spell out while you're going through. I should go back for a second to budget essentials. I wanted to talk about income and expenses. The second bullet on this screen, income and expenses should be equal. We're starting to have conversations around whether that really should be true. I mean, can you operate a nonprofit without having income? Can you build working capital? Can you, and you need working capital to operate an agency. Working capital is needed when the grant you were expecting on September 1st doesn't show up for another month. How do you make your expenses? How do you need a way to pay for those things. And so there's a bit of there's some conversation going on about whether we should be building into our budgets, building them as zero budgets, or perhaps and I have an example, a very simple example, where we put some, we did our budget and we came down to about a $5,000 profit, support over expenses, and we put it into a line called contingency.
Can we pull that up?
Yes, we can take a look at that example. But it's important for all of those reasons that working capital are funds that you need to operate and manage daily operations. You need to get through the disruptions in your cash flow that happen to any normal business. The mail's late, a check got lost, all kinds of things. You need working capital to allow for mistakes. Sometimes we make a mistake. The diapers didn't cost 9 cents, they cost 12 cents. And, you know, how are we going to make up for that? We've purchased them and we can't send them back. It also allows for new opportunities. If you don't have cash flow, you don't have new opportunities. You won't have, you won't be flexible enough to jump on new opportunities. So the Excel sample that Allison has put up is a very simple budget, and you could see the last line in the expenses is contingency. So had we not put that in there, we would have been showing support over expenses of $4,100 approximately. You could also see the departments going from left to right. We have general and administrative, fundraising, program A, program B, and then you have a column for assumptions. And I only put in one assumption, but each line should have an assumption. And if I were reviewing a budget that someone else prepared, I would want to know if it were based on last year's, and sometimes it could be as simple as it's a small number and it was just based on last year's with a 3% increase, or it's just flat funding. So that's what the assumption column's for. There's also a small, you could see over to the right, there's a small worksheet, and Allison has a much more detailed example of how you can list all of your income. But for this example, we just threw it up here, and we said, well, this is what we're thinking for income. We're feeling like we have a 50% realization rate on this, and that's what's going into our budget. So that's telling your board, this is what I need to raise. I'm feeling, well, not so optimistic at 50%. But those are the kinds of things that you come to consensus with, and you'll want to change that percentage as things change, perhaps. Change to the budget only before it's approved. I would caution budget revisions do happen, but I would say that you should stick with your budget for at least 6 months before you decide to do a budget revision. In most cases, small nonprofits, they don't have time to go back and do a brand new budget anyway, or never mind revise it. So my suggestion is if things change, as you're presenting your actual expenses, is just to keep track of why you're off in budgets and not worry so much that you're not hitting your budget number. There's probably a reason. It could be that you just screwed up and didn't put the right number in there, or it could be you were able to get a lot of office expenses, or a lot of office supplies for free, and you're under budget. Those are notes that you just want to explain. You don't want to go in and change your budget. Because remember, this is an approved document. The board has approved this. We want to, if you're going to revise it, if you're going to change lanes, you're going to have to bring it back through the same approval process. Okay. The assumptions, one back. So the budgeting process should be flexible enough to adapt should these assumptions prove incorrect. So generally, my boss, the CEO, will ask me, where's the padding? Because you always pad something. And that is another way of just assigning a realization rate to something. I know I'm not going to hit each of these things exactly right, and so in the sample budget that we had up a little while ago, we put in a contingency. I could be off on any one of these line items, and I'm guessing it is X. You can do it that way as well. We just put our income in there. But that's another way to do it. If you want to put a contingency budget of 5% of your total expenses, you know, that may be something you're all comfortable with. it is a flexible process that has to work for your group. Okay. So we're starting our budget, and generally, I actually start with the expenses, but this is, you can start either way, whatever you're more comfortable with. Start with, so starting with income, what have you received in the past? Is your organization positioned to receive grants? Do you have enough folks in your finance department to provide you with budgets and grant writers in your fundraising budget to write grants that you're going to need? Can you sponsor a fundraising event? How many? What kind? If you can't sponsor it, is there another way that you can raise funds in this manner? What is the board's role going to be in fundraising? Generally, there are two kinds of boards. There's a fundraising board and there's an operating board. Hopefully you all have a fundraising board. And they're going to sign on to your budget and hopefully pledge to raise those funds. And then how many local businesses support you? Can you get more? What's the plan? So once you've answered these questions, you can start building the income side of your budget. Part of this is also what can you get in kind. So if you can get, so if you're doing a fundraising event, can you get a location for that event donated? Can you get diapers donated that will help you meet your goal? Can you get, generally you cannot get an auditor to, but you might be able to get a discount on professional fees. Can you get some legal services donated? Those all factor into your budget. You, and this is very important, is you want to be realistic with your goals. Now, once you've generated this side of the budget, and Allison has come up with a nice term that I've started using, and you've scrubbed those assumptions to make sure they are reasonable, and you think you can raise this money, that's a good place to start. So we're not going to be building a budget that's going to spend more than what we can raise. So going on to the expense side, I always start with salaries and benefits. It's usually your biggest expense. I know diaper banks, if you're purchasing diapers, that could very well be your second biggest expense, but generally speaking, the salaries are going to be your largest expense, and those benefits. So in the example that we had, we put in salaries, but I didn't give you the detail. If you're building a budget, you should have salaries spelled out. And whether it's a full-time or a part-time position. So let's assume you have an executive director or a CEO, and she works full-time. That's one FTE, and her salary would be listed. The next position, you would list all the positions, and then decide if you can increase it for a COLA, or if one is needed. A COLA is the cost of living increase, and it has generally been flat these last few years. It has been flat. I have seen anywhere from 2 to 3% in grants. Budgets in small nonprofits will start off perhaps with a 3% COLA, and then may have to back down depending on the income to 1.5%, or could decide that they just can't afford any increase at all. You could decide not to do a COLA and put a pool of money. A board might say, let's put a pool of money in together, and depending on evaluations, split it out that way. So very many ways in which to address salaries, but the basic way is you must list the positions. You should list the positions and then the various benefits that go along with those salaries. We will all have FICA expense. We should all have workman's comp. I know there's some states out there that it is not mandatory. I think perhaps Texas is one of them. unemployment insurance, workman's comp, FICA, health insurance is a big expense. We're seeing 12% increases on our health insurance here in Connecticut. Can range anywhere from 3 to 12 if you're giving health insurance at all. There are some brokers out there that are very creative, and it is certainly worth looking at every year. It's one of those things you should look at every year. What do you need to operate? You need a physical location. You're going to have to pay rent. You'll have to pay perhaps utilities, definitely telephone and internet access. You will need office supplies. You'll need office supplies. You'll need rent, but could you get them donated? Some yes, some no. And that needs to go into your budget assumptions and factored in. Sorry, that's okay. Insurance, everyone should be carrying D&O insurance. That protects your board and volunteers. It's very important. Workman's comp is also very important, but again, different states have different laws. You should have, if you have employees, you should have employment insurance as well, and general liability. And you could have more insurances. But you definitely want to take, if your insurance number is a significant number in your budget, you should definitely spend time with your broker and scrub through those numbers to see what you need. Is it adequate? Do you need more, or do you have too much? You could find that you have too much. Transportation. Are they coming to our warehouse to pick up the diapers, or do we have to send them out? And again, warehouse costs. Could be a big number, could be a small number, could be donated. And of course, don't forget the diapers. Are you getting them donated? Are you going to have to purchase them? Where are you purchasing them from? Okay, so we've done all of our work, and our income and expenses are not in balance. This happens quite often. In the first example, income is greater than expenses. Take a look at your assumptions. Are you being overly optimistic that you will be able to raise the money you have in your budget? Do you need a rainy day fund? Did you put that into your budget? Do you have working capital? Do you need more working capital? One of the things that I would suggest is absolutely looking at your working capital and deciding with your board, what should I have for working capital? Should it be 90 days of my expenses, 60, or some other number? But you definitely, this is key, you should definitely have working capital. Your aim is to sustain the agency, and the only way to do that is by being financially healthy. And there are a couple of basic ratios and ideas such as working capital that will get you there. If expenses are greater than income, which is normally my problem, I have to go back in and take a look at my assumptions, and that's when, if you actually looked at your budget in detail and your expenses and broke them down to office supplies, what you're spending on coffee and water, and I'm using those expenses, and I would have to get rid of a lot of those to make any real difference. But if I've broken them out like that, then we can take a good close look at whether we need them or if we can do without or some other way, and you can be creative. Is there a way to create more income? So do I have the opposite problem? I really could raise more. Why am I only saying 50%? I have a 50% realization. Perhaps I'm being too conservative. Are there any other ways to save? And there are tons of ways to save. I know that could be a webinar in itself, but there are plenty of places to save. You just have to be creative. This is important. Of course, when you're starting with your budget, you're reviewing your mission, and you want to make sure that the programs you're putting into your budget don't deviate from that mission. Again, that could be a webinar in itself, but you also need to prioritize your core activities and services. You need to look at all of your programs. And I'm not going to say too much about this, but there is a great book out there called nonprofit sustainability. And we can give you it's by Jean Bell, Jan Masoka, and Steve Zimmerman. And it's a wonderful resource. I would recommend that you all get it. It basically, it talks about how to look at all of your programs. Are you getting, does it fit within your mission? Are you impacting a high number or a low number of folks compared to its profitability? And I know profitability is a term nonprofits don't like to use, but let's think about it in terms of gap. Is this activity impacting a lot of folks and I'm not constantly trying to fundraise for it? Is it breaking even with the money I have? Or am I impacting only a small group, yet I'm not able to raise the funds to cover, say, administration, et cetera, things like that. Okay. Some options to respond to a tight budget. You're probably all familiar with this stuff. Can we do the same work with less? Can we attract more volunteers? Can we solicit in-kind donations? Can we economize? I would say you're doing all of that regardless of how your budget comes out, because nonprofits in human services and basic needs don't attract all the money that we need to have healthy infrastructures, so we're doing all of these things anyway. If you're not and you have all that income, wonderful. Then you can have the infrastructure that you really do need to grow and sustain your organization. You may have to cut back on some of the work. When grants start drying up and funding sources such as the government are looking at different goals than they were the year before, you may have to cut back on number of agencies or become creative on how you deliver those numbers of diapers and do the work a little differently. Maybe folks have to come to you and you can't afford the transportation. I think this is a very important part of your budgeting process once you're, especially if you don't have working capital. If you don't have working capital, which I'm going to assume that most of you are struggling with the working capital or struggling to build up enough working capital in your organizations, I have an example of a cash flow that I've used for various organizations. It's very simple, and Allison's going to put it up on the screen. It basically is, so I built this based on across the top every 2 weeks. So my major expense is payroll. And I only have, I have a biweekly payroll. So every 2 weeks I have to come up with the major expense, which is payroll. You could see actually in this budget, the first two columns, I have a payroll number in the first 2 weeks. So this is an organization we took over a year ago, and they had a weekly payroll. So one of the first things we did was make them biweekly. They had no cash flow, no working capital, and so this was very important. I had to know where I was going to have problem meeting my debt obligations or my accounts payable. So you can see in red where I was running short of cash. On the top, I start with the cash balance that was in the checking account at the time, and the income is now based on when I think I will receive this income. So if there's, I don't know if there's special events in there, but if I'm having a special event and it's going to hit in March, that's where I'll put the money I'm expecting to get in March. It's fairly straightforward. It looks a lot like your budget, because the budget we're talking about, you all preparing, is an operating budget. It's your income less your expenses. So basically what this is doing is taking it and trying to figure out when we're going to actually have cash in hand and when we're going to have to pay out our money. And then for the shortfall, it's going to tell you whether or not you need to have some working capital. or access to a line of credit. So this example, this organization that we are now controlling did not have a huge deficit to worry about, but they also didn't have any way of paying for any of this. They had no working capital, they were insolvent, and they had used up their entire working capital loan to its limit. So they were paying interest on a line of credit in which they had no use, there was no room. They were not paying it down, and therefore they had no way of borrowing against it. And we can talk, we can certainly answer questions about this later on. So we touched a little bit on the next screen, sources of cash flow shortages. This happens quite often with all of you, and this is no new information. Your donations don't come in when you expect them. Maybe 80% of your donations come in at year end when you do your annual appeal, or whenever you do your annual appeal. If you have reimbursable contracts, you send in an invoice on the 15th of the month, just when they say they want it, and 2 months later, perhaps they will send you a check. So you've already put out the expenses, you haven't been reimbursed, so you're 4 months down the road. How do you keep going? And that's why it's so important to have working capital, because you might be able to delay a shipment of diapers, but everyone needs to get paid on time. So there's only so much of changing the timing of expenses that can happen. You know, your landlord might be great, but is he going to wait 6 months for you to pay your rent all the time? Probably not. And there are always changes in revenue sources and payment schedules. And once the governments or the foundations get on track for payment, you could have plenty of cash in the last 6 months and nothing to operate your organization within the first 6 months. So these are all unexpected or unplanned. They can be expected, but you still have to meet your obligations to keep operating. So I guess the emphasis I'm putting on your working capital, I feel strongly about. Some of so the organization we were just talking about, the cash flow that we had, they had used up their line of credit, so there was no way to borrow against that. It was also costing them money. There were late fees, there were penalties, there were finance charges on almost every accounts payable account because they were not paying even their vendor accounts payables. It damaged relationships with the vendors and contractors. No one wanted to work with them without a check in advance. We had no way of giving them a check in advance without putting an infusion of cash into the company. And there were plenty of lost opportunities for mission building activities and possibly revenue building activities. Not to mention the time worrying if you have a bookkeeper or accountant or a CFO or the CEO worrying about how they were going to make their payroll expenses. And I will give you a quick example of this. I took my first job in nonprofits. They were biweekly payroll, and every payroll we had to borrow money from an account that was set aside by the board to purchase furniture. And lo and behold, it was time for the board to buy the furniture, and I no longer had any working capital in order to make my payroll. Thankfully, I had a little heads up, and they had a few assets, so we were able to borrow and get a line of credit, and that resolved that problem. Not everyone is lucky enough to have assets in which to borrow from the banks. So those things need to be fleshed out in your cash flow. So the next, I pretty much talked about this. You're going to start with an accurate cash balance, what's in your bank at whatever point of time you're doing this. Make sure that your projections are based on reasonable assumptions and reflect the timing of receipts and payments. I will go back and look at when a contractor was making payments in the previous year to see when I would expect them in the current year. Use conservative assumptions. I would rather be pleasantly surprised than be short on something crucial like payroll. And be careful about including grants that are restricted for use in future time periods. For example, you get a grant for $25,000 to purchase diapers. No, that's a bad example. Okay, you get a $25,000 grant to renovate your facilities, but you don't have those renovation costs in your budget, but you put the $25,000 grant in it. That is going to cause major problems in your cash flow going down. So you have to be aware, and basically if you're in a tight cash flow crunch, you really must be looking at it every day and looking at your assumptions every day. Some best practices all over the board. You must have administration expense. You have to have infrastructure. You have to have people who are either donating their time to help you with budgeting and finance and payroll and all of that stuff. And these expenses can be anywhere from 15 to 30% of your budget. Have staff identify their hours in the budget areas, admin, fundraising. I have an example of a timesheet. You probably all are using something similar. And start looking with your board and finance committee about what your current ratio should be. This is your liquidity. This is your working capital. Your current assets should be greater than your current liabilities. And remember, when you're building budgets for foundations, to include G&A. No one should be expecting you to operate without G&A costs, because there are reports to be filed, there's accounting to be done, and it is unrealistic for them to expect that. And in the case where they put an unrealistic cap, we have some grants at New Haven Home Recovery that will only allow 5%. I am very clear in my budget narrative that the agency's rate is 15% and you're allowing 5%. Do they read it? It's there. It's documented. We point it out every chance we get. So some of the benchmarks that you all should be looking at when you're building your budgets and looking at your financial position are current ratios and working capital. Segregation of financial duties. This is about also about the health of your agency and internal controls. It is important that you separate certain duties, and your auditor or an accountant can help you make the best use of your personnel with this. We have one person opening the mail, one person making deposits, and a separate person doing bank reconciliations. So it is important that you spread these kind of functions around. Okay. Do you have any questions?
I'm going to take everyone off mute, and but if you have questions, go ahead. And when you do, identify who you are and what type of bank you're at. Any questions?
Yes. Yes, my name is Full Battle. I'm in Pittsburgh, Pennsylvania.
Okay, go ahead.
I have a question regarding the one moment, I wrote it down.
Okay.
Regarding our working capital, I'm in a situation where we really have no working capital because we started up. We haven't been in existence quite a year yet, so and our records aren't really complete. Everything we do is in kind.
So everything you're doing is in kind. You're dealing entirely with donated diapers.
We're doing it through our church, not half of us, but our doctor time, and we're looking forward to expanding. We identified the need, but we're not really sure how to expand from this point, from where we are, because it's hard to establish a budget for us because we really don't know. You know, we don't have a realistic idea.
So you're trying to, you've identified some growth areas, and you're 1 year old, and you have no working capital. Almost
right.
Almost 1 year old.
Yeah.
So you're an infant, and so your question is how to build some working capital?
Say again?
Is your question how to build some working capital?
Right. Right. How do I build that and still, you know, do it legally and still cover our book? And then also, how do I apply for grants when I actually, everything we do is in kind? How do I measure what we're doing?
Yeah. Right. So I would suggest that you build a budget. With your in-kind, but start looking at building a budget that you'll be paying for, because most grantors are not going to accept the in-kind budgets. And
right.
It is perfectly okay, and we didn't talk about this, but it's perfectly okay for a nonprofit to have profit. And they absolutely have to have profit in order to build that working capital. Being a nonprofit is not about not having profit. It's about what you do with that profit. So if you go off with that profit and, I don't know, buy a fishing boat, that would be inappropriate.
Right.
But if you, well, buy it. But if you have a profit because your income exceeded your expenses, that will start building up your working capital, and you absolutely need to do that. So it's kind of a shift in how you're thinking about it. You must have a profit.
But also, if everything is in kind, you are making some real cash donations. So if you're buying things at Staples and you're using your own money for that, that can be a donation that is real money you're spending. So if you have a 501c3 or a fiscal sponsor, you can donate that money, and then you are building your budget, and it's not all in kind. Does that make sense?
Yes. Yeah.
So you're saying donate the money first, and then let the agency write the check for the
right. If that's what you're doing, if that's what you're doing, is all of this coming out of your pocket or your friends and associates' pockets, then you want to start building a system where you can start collecting the cash donations and paying those things out, and build your budget as if you that you will have to spend that money in that way, and so that you can start asking for grants. But you are in a it is a very difficult in a startup organization, but you can do it. And Joanne's suggestion that you start asking those people who are doing in-kind donations to put the cash into your business makes a lot of sense to get started. But I think the key thing from that question that we should all take away is that a nonprofit can have profit and must have margin. No margin, no mission. I hope I was helpful.
It's right on point.
Okay.
Thank you.
Okay. Any other questions?
Yes.
I have a question.
Liz.
Go ahead.
Liz, why don't you go, since that's the only name I heard.
Okay. So this is Liz Sutherland from Happy Bottoms, and I really appreciate this presentation. Thank you so much. One of my questions is relative to the restricted grants. We seem to be able to get money for diapers relatively easily from some of our funders, and I'm not talking huge money here, but let's say that they were to give us $5,000 for diapers, and I loved your thought about putting some G&A in there, because yes, we have to track the purchases, we have to document everything and all that kind of stuff. So would it be inappropriate when we write these grants to say that, we're looking for $5,000, but 15% of that money will go to the administrative support of the grant? Do you think that's acceptable? Is that too high a percentage? And if it's like restricted to a diaper purchase, does that mean diapers only? Because that's how we've previously interpreted it.
Well, I think Joanne might be able to answer that a little better as far as what foundations are looking for. I think it is totally appropriate to include an administrative cost because it's inappropriate for anyone to think you can buy diapers or track them or do any reporting on them and not have any overhead.
And I think you can do two different things, Liz, or you can do a lot of different things, but one is to write your grant as though you're only asking for diapers, but in your budget, I think 15% might be a little high depending on the amount of money they're giving you, but put in a line item that, so it all adds up to $5,000, and so you're spending $4,800 of it on diapers, and then, a small percentage, 8%, 10% on other line items, whether it's warehousing, administration, or what have you. The other thing is one of the ways of addressing this, because there are donors who want to give you money just for diapers and don't care that it is not feasible to do that. That's why your annual giving and your individual donors are so important, because by and large their donations are unrestricted. So getting a restricted grant is not necessarily something you can't manage with. You just have to match it appropriately.
Yeah. There will be, that is the use for the unrestricted funds, is to cover these shortfalls in some of these grants. And I will, I would say if 15% is not your actual, I would use your actual. And sometimes if I'm writing a grant budget for $5,000, let's say, that's a small number, and I don't want to put 15% in there because it is so small, and I know they're going to balk a little bit, but I want them to know that there is this real cost. I will either put it in there as the need for a match, or I will put it in as 10%, and I will write in there that my overhead is 15. I am asking for 10% to cover a portion of it, and tell them that your unrestricted funds will have to go to the balance.
We had another question.
Thank you very much.
I don't know if that was helpful.
We had another question.
Hi, this is Pam Sutherland from Happy Bottoms. And my question went back to, on the budget, you have the three different buckets, the fundraising, the general, and the program. And I noticed that all of the revenues were put in the fundraising bucket, and I was just curious why those would not be allocated to the other categories, the other classes.
Well, aside for getting to do that this morning and kind of rushing through it, all of the unrestricted, I put all of my income in fundraising. If it's restricted, when I'm doing my books, I take it out of fundraising and put it into the program expense or into the program bucket. This is to, because generally my fundraising folks want to know the total that they've generated.
Okay.
So in this case, we did not, let's see, the in-kind should, you're right, the in-kind should have gone right to the diaper program. So that fundraising, so the in-kind income, which we've decided is 100,000 diapers, you're right, should have gone to program. But generally, I will put all of my fundraising and contributions and unrestricted into development. And you could have a loss on your programs, and you should be showing income on your fundraising because that's what's going to pay for the loss on those other programs.
So really just because, the allocation comes on the expense side. So it really isn't necessary unless it's restricted on the income side. So
yes, I would say that is true.
Yeah. Okay.
God bless you. So what I didn't do on that budget is I didn't figure out what the admin percentage was on that budget. But if we do this again and I'm invited back, I'll do one that's a little more detailed. I won't make Allison do it at the last minute. But I also had are all of you using some kind of time or activity sheet to keep track of your employees?
Even if they're volunteers.
Yeah, for volunteers also.
Oh, okay.
Yes, we are.
You are using that? Okay. Because that will help you build your budget. As well as if you start getting some grants and they want to see how you're allocating your money, you want to be able to show them that you have some infrastructure and you are thinking about those kinds of things. And there's some great, for personnel, there's some great websites out there that keep track of time and keep track of all this stuff. Any other questions?
All right, everyone, thank you so much for joining us. We'll send you the presentations because I realized I think there was about 3 minutes when I forgot to show you the slides, and also links that Angela has wanted to share with you. And thank you again so much for joining us. If you have any questions, go ahead and feel free to email us, and we'll pass them on to Angela and send a response. So thank you again.
Yes, thank you. And if anyone needs forms or any of that stuff, please feel free to ask for them. I'm sure that they've already been created, and we're happy to share them with you.
All right. Bye-bye.
Thank you.
Bye.
Thank you.